Assalamualaikum. This company named Ajiya Berhad were established in 1990. My name is MOHAMAD FAKRULLAH and I am from Group 2 for this subject FIN420. This company will recognize leading manufacturers and suppliers for building materials industry. They had two main business units, one metal and two glass. They serving multiple sectors which industrial, commercial and residential. They had strength in strong supply chain and had stable financial position. They had several challenges and risks due to their geographic concentration due to mainly operates in Malaysia and Thailand. Why we choose this company is because of their regional growth and financial consistency. Thank you.
Hi, my name is AZHARRUDIN bin AZIZOL. Student ID 2024 4672 466 class NBO3M. I will present the liquidity ratio analysis of Ajiya Berhad from 2020 to 2024. Liquidity ratio are used to measure company to meet short-term obligation using current asset such as cash and receivable. So strong liquidity indicate working capital, effective working capital management, while weak liquidity may signal to a cash flow constraint. So based on figure 2.11, Ajiya Berhad net working capital show generally increased trend from 2020 to 2023, which is rising from 233.8 billion to 322.1 million ringgit. This indicate that the company had a strong capacity to cover short-term liabilities using current asset. And then, however, in 2024, net working capital declined to 222.6 million ringgit due to significant reduction in current asset of over 100 million. Despite the decline, the working capital remained positive, showing that Ajiya Berhad still able to meet its short-term obligation. So moving on to figure 2.12, Ajiya Berhad current ratio remain consistently above the healthy benchmark of 2.0 throughout the 5-year period. So the ratio peaked at 6.14 in 2023. So the decline to 4.65 in 2024, although lower. So this level still indicate a strong liquidity position, since the quick ratio remains high at 3.41 in 2024. Which show that even without relying on inventory, the company has more sufficient liquid asset to cover its short-term liabilities. So in conclusion, Ajiya Berhad demonstrate a strong liquidity and effective short-term financial management over the period from 2024 until 2020 until 2024. So there was some pressure on liquidity in 2024. The company remain financially stable with no immediate liquidity risk. That's all.
Next, I will present efficiency ratio analysis Ajiya Berhad for the period 2020 to 2024. First, we look the average collection period. The collection period improved from 115.87 days in 2020 to 76.17 days in 2024. This means the company is collecting money from customer faster, which improve cash flow. Next, the average payment period decreased to 25.92 days in 2024. This shows that the company is paying supplier quickly, which indicate good liquidity. Overall, the cash gap is about 50 days and this is still manageable for the company. Next, we look at the asset turnover ratio. The inventory turnover increased to 4.21 times in 2024. This means inventory is managed better and stock is sold faster. The company receivable turnover increased from 1.67 to 2.09, meaning fixed assets are used more efficient to generate sales. The total asset turnover stayed around 0.50 mainly because the company hold a high amount of cash.
Assalamualaikum and a good day everyone. I'll be presenting leverage ratio for Ajiya Berhad, which include debt structure and time interest earned. First, let's look at debt structure graph on the left. The chart show the trend for 2020 to 2024. In 2020, Ajiya debt ratio was 12.5%, rising slightly to a peak of 14.64% in 2021. After that, the ratio declined steadily until it reached 11.26% in 2024. This tells us that Ajiya is relying less on debt financing over time. In simple terms, by 2024, only around 11 cents of every 1 ringgit of asset was funded through debt. At the same time, the debt equity ratio also reduced to 12.69%, which indicates stronger reliance on equity and lower financial risk exposure. Next, let's focus on time interest earned. Time interest earned measure how many times the company operating profit can cover its interest expenses. In 2020, Ajiya time interest earned was 6.79 times, meaning profit was only 7 times larger than interest cost. However, the value surged dramatically to 347.9 times in 2021, dipped slightly in 2022 and rose again to 392.35 times in 2024. This sharp increase shows that Ajiya has exceptionally strong ability to pay its interest charges. By 2024, its operating profit was nearly 400 times higher than interest expenses, which is a sign of a very strong earning and low financial pressure from debt. In conclusion, both charts show that Ajiya Berhad is in healthy financial position with low leverage and excellent ability to meet its interest obligation. Thank you.
Hi, Assalamualaikum and a good day. My name is ADLINA RAMLI and I will be presenting the profitability ratio analysis of Ajiya Berhad. Profitability ratios measure a company's ability to generate profit from its sales, assets and shareholders' equity. In simple terms, this ratio indicates how efficiently a company converts revenue into profits. As shown in figure 2.4.1, Ajiya Berhad demonstrate a strong improvement in profitability from 2020 to 2024. The net profit margin increased significantly from 0.16% in 2020 to 16.63% in 2024. It reflects better cost control and higher margin sales. Meanwhile, the operating profit margin remained stable at 19.03%, indicating strong operational efficiency and effective expenses management. Figure 2.4.12 shows that both return on asset and return on equity remain solid. In 2024, ROA reached 8.23%, while ROE stood at 9.24%, demonstrating efficient use of assets and shareholders' equity to generate profits. Overall, Ajiya Berhad has successfully transitioned from near break-even position in 2020 to a highly profitability company by 2024, highlighting strong financial recovery and effective management. That's all from me, and thank you for watching.
Next, our key recommendation for Ajiya Berhad. First, Ajiya should move from defensive approach to a growth strategy, focusing on strengthening market presence and expanding into new opportunities. Second, the company should leverage its low debt capacity. Third, Ajiya need to improve asset utilization by reducing idle cash and reinvesting excess fund into productive project and technology. Next, Ajiya must strengthen its long-term sustainability by balancing growth with liquidity and maintaining strong financial resilience. Finally, the company should enhance shareholder value through consistent dividend payout, improved earning and potential share buyback when suitable. Thank you.
My name is AINA and I'm here to conclude this case study has analyzed the financial performance of Ajiya Berhad over a 5-year period from 2020 to 2024 using key financial ratios. The results show that Ajiya Berhad has experienced a strong financial recovery and improvement after the challenges faced during the pandemic period. So from a weak position in 2020, the company has successfully transformed into a stable and profitable organization by 2024. In terms of liquidity, Ajiya Berhad demonstrates a very strong ability to meet its short-term obligations. Current and quick ratio remain well above the recommended benchmark, indicating effective working capital management and sufficient cash resources. Next, the efficiency ratio show positive improvement. This company has become more effective in managing inventory and collecting receivable, as seen from the increase in inventory turnover and the reduction in the average collection period. This reflects better operational control and healthier cash flow management. In addition, Ajiya Berhad leverage position is very conservative with a low debt ratio and extremely high interest coverage. The company relies more on equity than debt. This reduces financial risk and protects the company from interest rate fluctuations. Most importantly, the profitability ratios show a significant turnaround. The net profit margin, return on asset, and return on equity have all increased substantially, indicating improved cost control, higher operational efficiency, and better return to shareholder. Conclusion: Ajiya Berhad is currently in a strong financial position, supported by high liquidity, low financial risk, improved efficiency, and sustainable profitability. With proper utilization of its excess cash and strategic expansion plans, the company has strong potential for future growth.